Kia ora, good morning. It is Thursday. This is the second time I've recorded this morning because I did not press save. Yeah. Will this one be better than the last? Will it be worse? Who knows? No one will ever know. It is what it is. I'm Micro Markets. This is Kiwibank Markets in a minute. Okay, yeah, another day, another new recent high for the New Zealand dollar. Another night, I guess. But yeah, not just the Kiwi though. Most risk assets are on a bit of a tear at the moment. And depending upon how you want to measure it or count it, the recent global risk rally is now in its 7th or 8th consecutive day. Back to the Kiwi though, the bird hit a high of 64.44 US cents overnight, not far from that now. Yeah, to be fair though, not exactly one-way traffic higher. Some pretty chunky wobbles along the way, but higher is the moral of the story. As for relative currency performance, yeah, the market decided it was time for the Kiwi to knock the Aussie off the top of that currency leaderboard. The Kiwi still is, the best performing currency of the past 24 hours, probably. Past 21 hours, definitely. 24, probably, yeah. So from that we can infer, pretty reasonably, that all the Kiwi crosses, including the Kiwi Aussie, are higher this morning. Yesterday morning we were talking about Kiwi Aussie dipping a toe below 92 cents, and this morning it looks to be eyeing up 93. Again, yeah, 92.95, that was the overnight high. Drivers of that Kiwi rally, yeah, broadly the same as yesterday, and the day before, and the 7 or 8, 5 or 6, whatever, days before that. Summarising general risk on themes which are fueled by hopes around an economic reopening globally, and that's helping equities, and the Kiwi tends to follow equity trends. And there's also broad-based US dollar weakness, which is also fueled by those hopes because safe havens in general are struggling, and if you sell safe havens, you're generally buying risk assets. Then there's commodities, yeah, industrial commodities rebounding, again on those same economic reopening hopes. That story, and that's supporting equities, which is feeding into the Kiwi rally, yeah, and then there was some data on top of all that overnight. US ADP employment survey, much better than forecast. It's probably at the margin one, but it's still a contributor to broadly improving sentiment. And yeah, it's like going to a party in London or New York or wherever, meeting someone for the first time, telling them you're from Blenheim, and then someone nearby chiming in that they know someone from Blenheim. Yeah, everyone knows someone from Blenheim, and everything in the market is interconnected. Everything feeds into everything else. It's no escaping it. What's not unconnected though, and what has sort of been conveniently maybe ignored amongst all of the risk asset exuberance, that's the US-China trade skirmish. I'm sorry about that beeping. Someone's trying to talk to me in a hurry. Yeah, given all that's currently happening in the world, sure, that US-China stuff probably not front page material at the moment, but it is still simmering away on the back burner, and yeah, probably worth keeping an eye on. No one wants to see that boil over again. Yeah. Okay. Yeah, I think that's about it. We have covered a lot. Did go a little bit longer than I thought, and probably a little bit longer than the last one, but you'll never know that. Yeah. Looking ahead, the ECB, they're meeting tonight. Potential for a bit of Kiwi Euro movement there. Otherwise, yeah. Have a happy Thursday. Kia pai tōra.